So this is the EOD video that I did preview for earlier, why I prefer EOD, which is end of day trading. And what I like about it is I look at the charts pretty much at the end of the workday. So at 10 p.m. see what's happened during the price during this day, see if I get any signals. As you can see on this current chart of the pound CAD, I've already had a signal which I mentioned on a previous video last week. It's an EOD video and I've got pound CAD, so check it out on the channel. It was a long signal and that was on the 14th of September, long, and as you can see I would have been in at 62, let's get that right, it's around 62.93 and currently price is at 66.05. I did say first targets we'll be looking at 66.10, which we have obviously beaten it, gone up to this moving average, which I did mention as well that it might be possible resistance. Let's see how far did we go upwards. We went up to 66.72, went as high as 66.72 and we've retraced back from it. So we did see price does appear to have kept down there. Let's have a look at this on the 1 hour chart. Yeah, so the thing about with end of day trading, the stops are bigger, but the trends you take, the points accumulated would be the pips accumulated would be larger in relation to, say, you were taking intraday positions. Also, I know a lot of people prefer intraday because you can compound quicker, but you can also, there's also more opportunities for markets to whipsaw and for you to have losing trades. Whereas if you're taking end of day, you could be in a trade for a couple of weeks, couple of days, and your signals won't be as frequent. Although in this period over here we did have quite a lot of frequent signals, and this was around February, and that was primarily because we were in a trading range which we broke out of, and we've seen some fantastic trends, particularly after getting this signal just there, which was on the April 17th, which was a long signal. And look at that move there, fantastic move to the upside. We've seen a fantastic move to the downside. Obviously we've got a few whipsaws in around here. Move to the downside. We received a signal in June, and again currently taking a long position. There's a long bias position on the pound CAD. Now, like I said, you have larger stops, but you get less signals, so you preserve your capital in that sense that you're not constantly in and out of trades. And also, when I am taking these signals, I am placing my stop at the high or the low, depending on the direction that the signal is in. So if it's a short signal, I'm placing the stop at the high of the signal candle that has been formed, or at the low if it is a long position. And usually if price does not, which you don't expect it to anyway, because we're trading it based on momentum, we are not expecting price to go back down and go below the low if it is a bullish signal, or above the high if it is a bearish signal. So you pretty much know where your stops are. If price obviously goes there, then it's invalidation. Now your exit strategy, I'm likely to do a video on exit strategies, but it really is up to you whether you want to wait to see a signal in the opposite direction to take your profits. But if you do wait for that signal to come, you're likely to give up a hell of a lot of profits. Like for example, if you had taken this signal here on the 31st of August to go short, and let's see, the candle closed at 61.36, sorry, We did go as low 61.36. We did go as low as 58.50. So you're looking at pretty much near enough to 200 plus points. Yeah, you're looking at 200 plus points, near 300 points. And yep, you would have not seen a signal to exit until we've seen this bullish signal just here. Let's get it right at 62.93. So 62.93, but you would have got in at 61.36. So you would have had a losing trade there, despite the fact that you were near 300 pips in profit. So it does provide signals, but the exit strategy you'd have to work on yourself. That's but again, my trading methodology isn't for everyone. End of day, what I like about it, like I've mentioned before, just to recap, is there's less stress. You can concentrate on your work, family, and so on. You have a look at the charts once a day. You have pretty large stops, but you're less likely to be hit. You're less likely to be whipsawed in the market. Markets are less likely to trade down near the stop. We're trading momentum. And yep, you will accumulate large points hauls. So in some cases, you'll be looking at hundreds of pips. So yeah, those are my reasons for preferring end of day trading. It's a lot more calm and larger rewards. Obviously, you got larger stops, and we'll be trading in the direction of the larger market participants who will likely trend. Whereas when you're trading intraday, you might be right in trading a particular direction, but the market may whipsaw and take you out. So yeah, that's my reasoning behind end of day trading. Now look at a few examples. I did get a signal yesterday that I did not take, and that was on, I was supposed to do a video for it, and I suppose I could schedule it in this video here. I've got a signal on XAU USD, which is gold. It was a short position, so let's go have a look at it. So on the daily chart, as you can see, we've pushed up. We are currently in bullish territory, but price has come down, pulled back from the 13, near enough 1360. I think it's 1357, the actual high. Yep, 1357. We have pulled back. We've gone all the way below this red moving average here, which I'm pretty sure is a 20-period moving average. There is a signal there. That's the problem with this momentum indicator I'm using. Price tends to give up a lot before it turns around. So as you can see, let's see where the candle closed. It closed at 1306, and bearing in mind we had a high of 57, so pretty much $50 before we actually got a signal to the short side. So if you were holding from this entry there, and the close was 82, you would have had near enough over $70 of profit, but you would have seen a signal until you only had just over, I'd say just over $20 of profit. So you do give up a lot if you were to trade only, if you was only to close positions based on the turnaround of the indicator. And currently we did get a short, but as the market is extremely bullish, I was not confident in taking that short. And yeah, as you can see, price today has opened and has closed back bullish. So may just be an indicator that we are finding support around the $1,300 level. Also, we're likely to get some retracement, but as I've mentioned in previous videos, I'm looking for longs above 1320, although the exception to this being EOD Trading. I'm just not comfortable taking a short at this moment, as the price does appear really bullish, especially on the larger time frames. So hold on a second, my charts have accidentally refreshed. Let's get these charts back. Let's get these charts back to normal. And the slow wait continues as these charts load. There we go. So we've got oil, and it was this chart down here. So let me just enter this market here. Yep, so back to gold. Close that now. Back to gold. We've seen the large push down, candle closing near its low, and the very next candle did close bullish, but if you look at where it opened in relation to where it closed, we looked at the $4, but the bearish candle that preceded it, we opened at 1320, closed at 1306, which is like $14, several times bigger than this candle. So the moving gold, we're likely to get a more solid indication of the direction based on what the Fed will say or not say tomorrow. By the time this video is uploaded, it's likely going to be uploaded tomorrow due to the time it takes for me to upload my YouTube videos. So this is an indicator of the signals I take on my end of day trading. So I did say we had a look at gold. We did get the indication for a short. We did see previous to that, we did see a long there, but as we have traded below the low, that would have been a losing trade. Now the other trade would have been, so let's just have a look at the possible target for this gold as we're already on there. So possible target would have been all the way up to, let's get this right, all the way up to 1375. After that, you'll be looking at price moving to the $1,400 level. Now the previous month's low, previous to this one, would have been 1351, but let's say not 1350, 1250. So it's difficult to say, but I wouldn't think price would go to 1250 before first going to 1375. But again, depending on what the Fed says or does not say, price could retrace all the way back down to that 1250 level. But above 1320, I am bullish. So when it trades above the 1320, we're likely to see a turnaround in the momentum indicator on the daily, which I'm using for this end of day trading, and I would get a long signal. Now the other trade would have been euro dollar, and the signal was a long signal. I do remember it from yesterday. Let's just get this right, euro dollar. And yeah, so as you can see by that red triangle, it was a trade to the upside, and I am long biased the euro against the dollar. As we've seen in and around April, May, we had the Macron victory over Marine Le Pen. Price gapped up, hasn't looked back. We found support around that 200 period moving average, and we've just pretty much been trading pretty close using the 20 period moving average as a support. So as we've seen, price had gone up to the 120 level and has pulled back all the way down to the 20 period moving average on the daily. We have put in a candle whereby which it has pushed down but was bought all the way back up and closed bullish, which is a really good sign, indicating that there are buyers in the market waiting for opportunities to buy and push the market upwards. So currently on the euro dollar, the signal did come in and for a lot to take a long. Now the candle with the triangle attached providing the signal closed at 119.48.8. So let's just say 119.49. We're currently trading at 119.93, so we've been up just over 40 pips so far. The markets are likely to go into a range now, with the FOMC decision in mind, but the long-term trend and the momentum that's been indicated by my indicator is for the price to continue upwards. I have mentioned in previous videos quite recently that I am looking for some sort of resistance in and around the 122, 123 level on euro dollar. But yeah, so we've got a buy signal, although this is where it's somewhat difficult, because we've got a buy signal on euro dollar, so we're suggesting that the dollar gets weak against the euro. But we've got a sell signal of gold against US dollar, which suggests, that gold is weakening against US dollar and US dollar strength. So I suppose the dollar can be weakening against the euro and strengthening the gold simultaneously, but it's a strange place for it to be honest. But those are the indicators so far. Those what's been indicated so far. So if I have a look at a few other pairs, I've not got signals on them, but let's just have a look at them, just to have an idea of how good EOD end of day trading is, and the possible rewards available. Now if I go to the CAD yen, because we have seen strong move in oil, and yeah, what have we seen here? Now the first buy signal is over here, because if we look at it here, we've had these lows in and around June, and we've seen 3 touches of that region there around the 80 level, around the 81 level. Prices pushed up, come down, pushed up, broken out above these moving averages. So we've got a 50 and a 200 and a few other moving averages. It's come all the way up, pulled back quite a bit, and slowly ground its way before really starting to push up. Now the first signal was, let's just get this right. First signal was in August 24th, to go long. Now, if I did take that signal, I would have obviously lost based on the candle, which was on the 29th. The long wick would have taken me out, but this candle coming all the way down and closing bullish did provide another long signal, with the stop being placed at the very low of this candle, which is quite a sizable candle. Let's just see where we are. So the candle did open, well, the candle did close at 87.62, and we are currently trading at 90.78, 87 to 90. So we're looking at well over 300 pips. Let's just get that right. Let's just see. Let's just use the measuring tool. Now we've got the tools here. Oh, yeah, there we are. 300 plus pips. So there was potentially 300 pips right there on the CAD yen. That's for to the long side. My stop would have been, so it closed at 62, but the stop would have been all the way down at 86.44. So almost 100 points worth of stop. But we did expect a break continuation upwards. And if I go have a look at the monthly charts, let's see where we are. Yeah, we are expecting price to continue all the way up until the 92 level, after which I'll be looking at the 100 level being a big grand psychological number, and above the 100 you're possibly looking at the 105, 106, let's just see, around that 106 level. So CAD yen, we have got a bullish bias based on the daily signal, but this is the EOD example. Let's just have a look at another pair. Let's say the AUD dollar, Canadian dollar. Let's just have a look at that. The last signal we would have received, we would have likely taken it. So if we have a look at this on the monthly chart, okay, let's just have a look at the monthly chart. The monthly chart, doesn't look, it's not very appealing. It does appear to be in a range from range, you're looking at 94 to 104 ish. It's about 104, so 94 to 104. As you can see, we've been bounced around in that range. If you have a look at the daily chart, on the daily chart, as you can see, we have started to push down before we got a signal to go short. We did go up, test, continue down, small lower high, and it's continued down. So would have got a signal. Let's get this right. Let's zoom in. We would have been given a signal on the 31st of August to go short the Australian dollar against the CAD, and yeah, it would have been quite a profitable position to hold. Now we do see what I did mention earlier about the indicator, the momentum indicator does not give good exit signals, and yep, as we can see, the price does appear to be retracing quite aggressively. So yeah, there's the Australian dollar CAD. This is just one more example. We've tried the Australian dollar CAD, we've tried the CAD, so let's just see. Let's just say if we could do the US dollar, Swiss franc, US dollar and Swiss franc. Let's see where we are. Again, Swiss franc it's a dangerous pair to trade, to be honest. The Swiss franc. Let's just see. This is somewhat inconclusive. It does indicate that there might be a bearish bias on a monthly time frame, but no, we're just pretty range bound. If you look at it on a monthly time frame, we are range bound, and if we go down to the weekly time frame, again we're slowly grinding down, and we are doing the end of day trading. So we'll be looking for short positions, obviously, if we were to say these lows here are an indicator of the trend we expect. And yeah, we're just waiting for a potential short signal. And as you can see with the US dollar Swiss franc, you do get a lot of whipsaws to the upside and the downside. So yeah, it's not my type of currency to trade, to be honest, but I'm sure it's someone's cup of tea. Look at the CAD CHF. Let's just see where we are in CAD CHF terms. CAD CHF, we've gone up to the 79.50 and we have pulled back somewhat. Chart looks almost identical to the XAU USD chart, and in the sense that we have had a push up. We've had a higher high, but we've seemed to have gotten into an area where we've been getting some pretty sizable, been getting a pretty sizable retracement. But let's get this back to the pound CAD. Pound CAD, and yep, that's my opinion on end of day trading. I've shown a few examples. I have put in this video the XAU USD and the Euro USD positions, which I should have done a separate video for on Monday. So that's it for the video today. I'd like to thank you for coming to watch. So it is LCS, like, comment, subscribe, and again, thank you.